Cash flow is the lifeblood of any business. And oftentimes as business owners, we confuse cash flow with net income. Now, I like net income as a metric for a lot of reasons. One, because it's very easy to find. It's always calculated on your financials. And as a business owner, of course, you're using an accounting software that can easily give you reports, right? And so you run your financials and you can run your profit and loss statement. At the bottom is the net income. Great. I like it. It's an easy barometer to give you a general idea of how the business is going. And based on its range, if you're under 10%, you probably are struggling a bit. Obviously, if you have a negative net income number, that's a problem. Somewhere between 10 and 20%, you're survivable, and above 20%, usually for most businesses, you're going to do pretty good. You're going to be able to stay in business as long as you want to stay in business at that percentage. But we talk about cash flow, and not everything in net income is included in cash flow. I want to explain the differences between the two numbers. I'll use an example of something that is probably familiar to most of us to help illustrate the differences. So let's say I purchase a car with a loan. I go to the bank, they give me a $60,000 loan for a car. That $60,000 goes to the dealership. I now buy a car. In the sake of this example, I'm using the car for business, so it's a business asset. And now I'm making monthly payments on this $60,000. Well, that's cash, right? I got the $60,000 up front, and now the bank requires me to pay it back with interest. So let's just say my payment is $600 a month. Cash outflow, $600. My net income is not going to reflect that $600 payment. It's only going to reflect the interest portion of that payment. Me paying back the principal amount of the loan doesn't decrease my net income. So anytime we have loan payments for whatever reason, that's cash outflow, but my net income number actually stays higher because the principal amount is not a reduction of net income. On the other side of the coin, what happens if the revenue from clients isn't enough for me to cover all the expenses? In this scenario, I have other expenses, which means I have to borrow money in order to cover those expenses. So my net income is going to show a loss, even though from a cash flow standpoint, I was taking money in from a lending source in order to cover those expenses. And that's why cash flow is different than net income. If you're doing your accounting the right way, which definitely starts with using a software, softwares have three primary financial statements: the profit and loss statement, which shows you the net income at the bottom; a balance sheet, which tells you, here are the assets I have, here's the liabilities that I owe other people. And there's also a third one that's very often overlooked, which is the cash flow statement. So sometimes it's really helpful to look at the cash flow statement. You can see the cash flowing in and out, because again, cash flow is the lifeblood of your business. That's the beating heart. That's the blood flowing through our bodies. Our businesses need that. But if I'm just looking at my profit and loss statement, I'm not necessarily getting the full picture of my cash flow. Certainly, we can look at bank account balances in real life and get a feel for how things are going. Is the bank account decreasing or increasing? But we want to look at the full cash flow, the full financial picture by using the statement of cash flows. Now, when I talk about cash flow as well, one of our missions is to help business owners avoid burnout and keep them in business for as long as possible. Meaning, as long as they want to be in business, we want them to have that freedom not to be forced to make a decision. When cash flow is tight, we naturally are going to make bad decisions. Some of those bad decisions are, crap, cash flow's tight, I need this revenue right away. Therefore, I'm going to work extra hours. I'm going to make my team work extra hours. And while certainly if there's a short-term emergency, things like that are possible, unfortunately, those emergencies often just become to habitual behaviors of business owners. And we call it workaholism, but at the end of the day, it's not. It's more of a need we feel to work the extra hours so that we have the cash flow coming in to help with everything that's tight, because, I have bills that are coming up and I need cash flow to pay those bills. So therefore, how to get the money as fast as possible. If I continue going down that path, my team members get burnt out. They start looking for other jobs that aren't going to require them to work so many hours. I'm also going to get tired, because at some point It's different for all of us, but there will be a point where we say, look at all the hard work I've put into this and I have nothing to show for it. Sometimes we look at this tight cash flow that spending more time is the solution, when in reality, we need to pause, take a break, slow down, and work on the business and look at the different systems that could be causing the problem. Maybe my cash flow is tight, not because I'm not working hard enough. It just could be I didn't price the client the right way. It could be my expenses to deliver the service went up. It could be I priced the client the right way, but now they had unrealistic expectations and I'm doing more work for them than I'm charging them. It could be that I have expenses that are out of control that aren't even related to offering the service. There's lots of reasons. In fact, I would say these reasons fall into 4 main categories that every business has. Cash flow, your team, because maybe they're not efficient enough. Maybe you didn't train them well enough. So they're not doing as good of a job as they can if they had proper support and resources. Systems, how are the processes going? Do I have processes? Do I have systems? Am I reinventing the wheel every time? Or is there a system that everyone can follow every time that we've proven to be the most efficient? And then clients itself, priced right, priced wrong, expectations, good clients, bad clients, boundaries, all those different things. They generally fall in those 4 categories: cash flow, team, systems, or clients. And we're just not usually taking enough time to figure out which of those areas is actually causing the problem. Because if I fix that problem, now I don't have to work the extra hours, because the need I feel to work the extra hours is really just a symptom of the true cause. And so taking breaks, giving yourself that break of rest so that when you come back and work focused is super helpful. And then when you are working focused, take the time to actually analyze what is the true root cause of this problem and fix that, instead of thinking throwing more time at it is going to be the solution. Because I promise it's not. If the thing is broken in the business, it's going to continue to be broken, and you're going to continue to feel like more time is the only solution. And that path will lead to burnout at some point, and we want to keep you in business. So I've written a book about some of these concepts. If it's of interest to you, I've backed a lot of this stuff up with science in the book. Please click the link below and look at the book.